Okay, thank you everyone. So let's get to the Q&A session that we've been planning from the beginning. So I have two more colleagues joining the panel session. Let me introduce them first, and I'll also bring back the earlier presenters to the stage. Further to the panelists, the presenters who gave us their presentation earlier, we have a colleague joining us online from Tanzania. We have Aloyse Maro, head of retail products and channels at the National Microfinance Bank in Tanzania. So he'll be joining us online. Aloyse, are you there?
Yes, I'm here.
Okay, thank you. So I'll come back to you in a minute. Let me introduce the rest of the panel. We also have Patricia Ojangole from Uganda. She is the managing director of Uganda Development Bank. She has more than 20 years of international experience in the banking and finance sector. She has a first-class master's in philosophy in development finance from University of Stellenbosch in South Africa. She also holds an executive MBA from the Eastern and Southern Africa Management Institute, Arusha, Tanzania. She also holds a Bachelor of Commerce degree from Makerere University in Uganda. So, Patricia, please join me on the stage. The claps are dying down quickly. So I'll also bring in the earlier presenters from the previous sessions. So let me bring in Endeshaw from UNCDF, Aman from Cooperative Bank of Oromia, Munir from Kifiya Financial Technologies, and Paul from Safaricom. So I have called on a list of 5 people. I need 5 times this clap. Okay. So the gentlemen from the previous presentation session had their chance to speak. So I'll start with Patricia, and then maybe I'll go over to Aloyse as well. Maybe if I could give you a chance to first introduce the Ugandan Development Bank, what sort of areas you guys focus on, maybe that could be a good start.
Okay, thank you, and thank you for inviting me. It's my pleasure to be sharing some thoughts with you this afternoon. So, Uganda Development Bank is a government development finance institution. We are 100% owned by the government of Uganda. We're working as a policy bank currently, enabling the government to achieve some policy directions around access to capital for the private sector. If you listen to the private sector in Uganda and ask them what their critical challenges are, affordable capital ranks among the top 3. So that's exactly the gap that we are trying to bridge. Not that there are not other financial players in the country, but we look at supporting where probably may not be able to reach. We are organized along sectors, so it's not that we will support anything or any sector, but we have to try and identify and align with the sectors that are productive, that generate the highest economic impact or return to the government in terms of product output, taxes. That is really what Uganda Development. And being owned by government, we are a company, so we are very free to innovate and deliver anything, any financial intervention that we believe can help us achieve that objective. I'll probably come later to some of the specific interventions that we offer, especially related to issues of access to finance and financial inclusion. Thank you.
Thank you, Patricia. Maybe let me give a chance to bring in our colleague from Tanzania, Aloyse, who has joined us online. So I will start with my first question being maybe for you to introduce the National Microfinance Bank of Tanzania, and then once we have that, I'll come back with one more round of questions for everyone. Thank you.
So thank you very much, and it's a pleasure to be part of this panel. So NMB Bank PLC is a publicly listed bank. We're the largest commercial bank in Tanzania. We have over 6 million customers, a very broad distribution network with over 227 branches, over 700 ATMs, and over 20,000 bank agents. In 2022, we closed with a balance sheet total asset of $4.2 billion and customer deposits of $3.2 billion. In terms of profit after tax, we closed with 180 million. So in a nutshell, that is NMB. We celebrated our 25th anniversary last year. Thank you very much.
Maybe if I could follow up, Aloyse. In your name, it says a National Microfinance Bank of Tanzania. So this is a slightly a new practice for us. Maybe if you could tell us about how you have managed to combine microfinance and bank. And I've also seen some statistics in terms of the national level of your operation. You rank pretty much high in the sector. So maybe if you could tell us a little bit about how you're able to combine those two in your operation.
So thank you very much. So NMB started off as a microfinance bank, but we became a fully fledged commercial bank. So it's a two-pronged approach, really. We have a wide range of solution and products for the micro businesses, but also we leverage on our wide distribution network, which actually allows us to guide these businesses and how to access the finance, drive financial literacy that will help them grow their businesses. So we have solutions tailored, and actually access to those solutions is very easy. For example, we have a digital micro loan product that we had launched last year that allows these micro businesses, micro and small businesses, to access credit facilities of up to $200 via their mobile. There's no collateral required, no interest, and it's instant. So we really model that out. It's a mixture between our distribution model and our product suite.
Thank you, Aloyse. Patricia, maybe if I come back to you on the earlier point, you mentioned UDB is a government entity and it's intentional about the work they do. You do. So maybe if you could tell us some of the work you did in terms of driving economic development and financial inclusion. What are the type of areas you focus on the type of work you do?
Okay, thank you. We have three what we call high impact goals. The first one is to promote sustainable agri-food systems in Uganda. So obviously when we talk about agri-food systems, you're talking about everything agriculture sector, and sustainability, looking at issues of climate change, for example. So we look at that holistic value chain. You're looking at productivity, and you're looking at agriculture food, not just food crops, but other value chains that may not be food, but of strategic importance in the country. So the second one is to promote sustainable industrialization. So again, you're looking at industrialization. Our national industrialization policy has 3 components: the agro-industry, mineral-based value addition, and knowledge-based and capital-intensive industry. So what we try to do is to see how to unlock opportunities across all those industry value chains. And then the third one is to promote a sustainable services sector in the country. So here we recognize that there are new emerging sectors that offer opportunities for job creation. And if you look at structural economic transformation, we need to be able to move the country to where people can find jobs, and there are new emerging services sectors that provide those opportunities, such as ICT, etc. So it is a broad mandate. So some development finance institutions may have a limited or narrow focus, maybe agriculture, bank, etc. But we have a bit broader mandate. So those are where we draw the critical sectors. And this is aligned to where you find national priorities. So what we do is really evaluate the national development. And usually during the process of developing those, we are in here to see how do we support, promote development of those sectors. Also, our government is also pursuing a private sector-led approach to development. So that is, I hope you're starting to see the link where the bank comes in. So who are the players in the private sector? Again, if you look at the structure of the economy, we have SMEs. And I think this should now bring me to starting to talk about some of the interventions we've specifically done around access to and supporting SMEs. Usually when we talk about access to capital, what I've learned over the years is we tend to focus on the supply side of access to capital, which is money being available. But we know, and experience shows in our economies and globally, that capital is actually available. But what is probably lacking, or where we have not focused, is on the deployment side, or I prefer to call it the demand side issues or challenges around access to capital. So even in our own country, the banks hold so much liquidity. Money is there. We get development partners coming from all over the world, and they ask us, we are looking for projects. We want, projects, but we don't see them. So we identify that gap, and we thought that being a national DFI, we are not going to move this conversation if we do not come down to look at the demand side, issues around access to capital. So specifically for SMEs who are very, very small borrowers, and the minimum in our case, for example, would start from $15,000, okay? So there are enterprises that need that kind of capital. But many times, these are the ones that would probably be excluded because we all tend to say they are risky, they are not bankable, there is money, but we cannot give them. So what we are doing is to look at the entire value chain, demand side, supply side. So we have introduced programs such as one we call Business Accelerator for Successful Entrepreneurship. So here we are deliberate about identifying any or every SME, every Ugandan that has any kind of business, even if it's just an idea, and then we want them to develop those ideas, take them through this process. We actually mapped about 18 different services where these people may be lacking and they need to be supported to be able to be bankable. So we identify across the sectors that I have mentioned, and then we support preparation. When you do that, you're already de-risking them. And then when we do that, we then get them into the pipeline and provide the funding, which obviously has to match their needs. They do not have collateral, so what do we do about that? They may not have equity to put in as their investment, what any bank would usually ask for, so what do we do about that? What about the interest rate pricing? As we're talking about digital financial inclusion, I wanted to ask a question that at what rate are we giving these, funds, to these small businesses or consumer loans? Like I mentioned, ours is a policy institution, and one of the key areas that we have to address is cost of of capital. So we lend at way below, less than 50% below the market. So you really find that any business enterprise in Uganda that seeks capital, patient capital, will end up to 15 years at less than 50% below the market. So we have seen a lot of interventions that we do. And like I have mentioned, the private sector requires capital, so that is one of the interventions that we are doing around that. Maybe I can stop here for now. Thank you.
A very interesting approach. I mean, so this is a unique kind of approach where your work encompasses a range of areas within the ecosystem. So that's very interesting. I hope we'll come back and hear about that more. Maybe for us, I mean, we're here to also learn about the best practices for ourselves here. So before we are able to get to accessing finance, I would assume financial literacy is a key consideration. Maybe this question is for you, Endeshaw. How would you see us addressing that best before we get potential customers to access finance? So how would we best approach financial education, especially given that we have given it a lot of priority in many of our financial sector strategies?
Okay, thank you. I'm not by practice like an education expert, but in terms of building financial literacy, it's not something that we can take as a heavy task or training activity, but it's something that we should, as even indicated in the presentation, we have to integrate it into our day-to-day lives. Now, for example, if we're not educating kids, for example, around the age of be it 10, 12, or about 15, it will be a challenge for them to actually manage their finance when they grow up, or it is going to be a new task that they have to carry out when they actually have cash on their hands. For example, if we take some families, they start teaching their kids about saving, working in their young age. That will help them actually manage their finance better, and also even start using financial services to the best of their activities when they grow up. So such kind of trainings can be easily gamified. There are different tools that can be used to educate youngsters or even adults to actually push towards the financial inclusion. And when we talk about that, the contextualization aspect on how, when we talk about inclusion, it's not just simply around urban areas. Usually the excluded ones are the ones that live in rural areas. Women, the youth, they are mostly excluded. So by targeting them, we have to come up with a resonating solutions that we can educate easily, and also even embed such kind of literacy programs in the day-to-day life, so that it won't become a hassle to actually push people learn about financial literacy, but it should come effortlessly. When they actually are living, they can just simply exercise that, and it will be easier for them to build confidence, trust, and easily be bankable.
Thank you, Endeshaw. Maybe going over to Aman. The micro-lending experience you showed us earlier, very interesting outcomes and a very, very excellent success story. So in terms of addressing financial inclusion, how have you been able to address the issue of gender inclusion as well in this product? Maybe not only in urban areas, but also in places that are further away from the major cities.
Thank you. Actually, regarding the inclusion side, especially on gender side, frankly speaking, we did not plan it, but as the data is telling us 35% of our customers who took mutual loan came up to be women, which is so encouraging. I think the financial inclusion, when it is collateral based, as you know, only few will get access to finance, and the country as a whole, when we say it, is obvious male dominated. But when we come to MSME, it's the women's side who strives to win their living as well as give a better life for their families. So the data, when we see the data, it came up that 35% of our customers came up to be women. The other surprising thing that we have observed is one of the challenge on uncollateralized micro-lending, digital micro-lending, is the repayment culture. Of course, as any product, we have some NPLs, but when we see the data, it's the reverse. Around 90% of non-performing loan are men, and women are very disciplined in repayment, and you know, their life, we're affecting their life. So it was not deliberate, but now based on the data, it's going this way, but we are on the MICHU 2.0, we want to do it deliberately.
Maybe have you, this is an interesting statistics, and have you considered this maybe in the way you score or you pre-qualify your customers for this uncollateralized loan? We see that their repayment rate is better. So was it in any way reflecting in the pre-screening?
Yeah, I think so. The algorithm, it says your transactional history as well as your behavior. So based on that, of course, that's one of the factors.
Well, again, very nice to see this. So maybe if I go over to Paul, earlier, my question actually was related to how mobile money helped financial inclusion. And when I see you talk about use cases, first thing that came to my mind was micro-lending that M-Pesa is well known for. But you mentioned the case of saving as an interesting use case there. Maybe if you could say something more on that. How important is that in terms of financial inclusion?
Thanks, Abel, for that. So when we launched microcredit, it was not purely microcredit, it was microcredit and microsaving. And the idea was to have a deposit-led product, essentially meaning customers would be saving more than they are borrowing. But in the first 2 years of operation, we see that flip, where the demand for loans was higher than how much they were saving. And that is how the product construct changed from a deposit-led to a credit-led. And that was the product we called Mshwari in partnership with NCBA. And we wanted to change that because we believed as an organization, it's always good to empower people to be able to live within their means and only access credit at the point of need. But that was proving to be wrong. We went ahead and further introduced a new product, which was also a deposit-led, which is KCB M-Pesa. But again, customers proved us wrong. Remember, customers' behavior informs what innovation is all about. But apparently, as an organization, we do value the well-being of our customers. And we are working towards and asking ourselves, what is a corrective measure we can put in place to change this behavior of people being over-reliant on credit and start saving for the future? And the way you see that number, 13.3% of GDP, the government has an aspiration to move that number by 2030 to 30%. You may be of the news, the partnership we have built with the government of Kenya, where we are giving credit to citizens. But out of it, a percentage of the credit be given to them is automatically saved. So for us, why are we doing this? Is because we need to protect our customers. We need to ensure they can live a sustainable business lifestyle, but again, also showing the future of being able to save for tomorrow. And saving for tomorrow could be for something in terms of emergency, in terms of medical, or be able to pay school fees for your kids. So that is a trend you have seen, and an organization where we have to reverse that if we have to have a healthy citizen within the country.
So let me come to Munir. Your presentation focused on partnerships, and you highlighted the need for partnerships to be able to be agile to respond to customer needs and the industry trends as well. I mean, the financial sector being usually measured for or considered as presently a systemic risk if a type of partnership didn't work out properly. And most of the players in this ecosystem tend to be startups who have interesting ideas but have not been yet tested. So how do we balance this issue of partnership and maybe protecting the industry or the ecosystem from risks posed by such players?
I think that's a quite interesting question. I mean, at the base of it, it's public money, so there has to be a certain amount of safe and soundness in the way that public money is managed. The question is now, how do you match that with innovation? So many countries approach it differently. Some countries have this interesting approach of creating sandboxes until a product is tested, until a technology is tested, until the whole ecosystem is understood and the risk around it addressed. Then they partner with what is typically an innovative product or technology or startup. Some countries take what I was presenting earlier on in a very different context. Some have very light measurement of due diligence. So they don't become very strict in the way they are looking at assessing the partnerships. Some take it to the middle value and some take it to the highest value. So it's really about how banks and insurances think about risk and how they manage and mitigate risk in this ever-changing, innovative world. So, I mean, if they have capabilities, the best advice is look at a sandbox deployment, which is very difficult to do in a country where there's very little technology at the moment. So the best way to do it is maybe look at a light version of due diligence and then eventually increase it.
So still, issue of partnership being key, how to manage that partnership, how to manage potential risk coming from that is the way to go, right? Maybe, Patricia, if I can take this question to you, in terms of addressing the basic issues or the basic pillars your entity, UDB is working on, what are the types of innovations you have approached, and then maybe if you could also incorporate the issue of partnerships. How do you see? I'm sure with this vast responsibility your organization is taking, partnerships are very important. So how have you addressed this and what can we learn from that?
Thank you. That's very true. What we realized that there is no single solution or intervention that we can deliver alone, even as a bank. I'll just use one innovation where yes, it was an innovation. It's actually a digital lending solution or platform that we call AgriConnect. So it's helping us to provide funding, small loans to VSLAs. But we are working, or we partnered with a fintech company in Uganda that's called Ensibuko. So they created that product specifically for us, but we had to sit with them, tell them what we wanted to do, what the requirements are. But again, we worked with about 4 entities, yeah? So we worked with the Food and Agriculture Organization in Uganda. Obviously, they will understand the sector as well. And then we worked with UNCDF. I think there's actually someone from UNCDF Uganda office here. So they brought in their digital, knowledge and outlook into that intervention. And then there are us who can go. We have the clients, and not just clients, but they're already into specific value chains that we are supporting. And then we had the European Union that had the funding to kind of sponsor this initiative. So I think that's just an example of partnership. So that is one of the innovations that we did. And with this innovation, we actually intend to deal with the issue that we've been talking about. How do smallholder farmers, for example, access credit given their peculiar characteristics? So that is one. Then I'll also use the opportunity to talk about another innovation that we do, and let me just call it value chain or program-based financing, where again, when you're looking at to deliver a solution, you don't just look at a bit of it because it will suffer somewhere. And again, that's what we learned. So if, for example, someone comes to the bank and say, I want to set up a processing facility, you're not going to deliver it alone. You need maybe outgrowers who are going to produce for you whatever you need to produce, whether it's an agriculture kind of a product or whatever it is. So we have to look at that entire value chain. Where you're going to produce, where is the market, what shows, what demonstrates, what can we do to link you to probably where, how we can get, market, but also on the production side, we have to work backwards to say, if this is the total installed capacity over what you're going to process, how much do you need actually in terms of volumes and on a daily basis? So you're looking at the entire operation or program. Then maybe another example I can use is given our broad mandate and trying to identify where there are critical challenges or value chains that we think are critical. If you look at the northern region of our country, that region does well in oil seeds, for example, the soil texture, etc. Now, the processors, without looking at the bottom line in terms of they'll actually need seed, go setting up processing facilities. So then what happens is you have installed processing capacity, but then they're probably operating at 20% capacity, and the main reason is there is no seed. So why is there no seed? It's because as a country, we are not generating or producing that seed, we are importing, and there are only 2 importers. So this is where we come in to say, what intervention can we have here? So we identify, for example, the National Agriculture Research Organization, who have their capacity. Yes, they will have some seed capital, they will innovate, but what they'll probably lack is capacity to multiply those seed varieties, but of course goes through a process of testing, etc. So we come in and partner with them and provide some funding from our own resources and budget and say, let's support the National Agriculture Research Organization. We do processes that are required, multiply and be able to generate seed. So when you generate seed, you supply seed to the farmers, and then the farmers are able to produce, and then the processors are able to process, and then supporting the entire region. So those are some of the innovations that we are doing, and that's just one example of a value chain, but we're looking at the same in oil palm. We are importing. So again, like I mentioned, our interventions are deliberate and purpose. So if you're saying we are replacing importation, so why should we import oil palm and yet we can produce? So then we go and identify, which region, where are the farmers, what is their state. And with this kind of interventions, we have to work with a lot of people. You have to work with the Ministry of Agriculture. What is it that they can bring on the table? The farmers have land, and all they have is land. They don't have collateral, they don't have anything, but they are willing to work. So it is a whole partnership, and then that way you are able to kind of deliver some solutions, but also solutions which are intentional and can address some of the challenges that exist, but also enable the people and the communities to kind of empower themselves. Thank you.
That's an excellent example of across doing this whole work across a value chain. It's also incorporating everyone within it, I hope. Speaking of value chains and agricultural value chains in particular, NMB is also a practitioner of that, and they have built an extensive experience in agri-business loans. Aloyse, if you are there, maybe my next question is directed to you. Maybe if you could tell us your experience on lending to agribusinesses, what sort of lending approaches, what sort of innovations and partnerships are you incorporating into that work?
Yeah, thank you. So yes, agri-business and agri is a very strategic area for the bank. The sort of partnerships that we get into are with what we call the agricultural marketing cooperatives societies, the AMCOs, who the smallholder farmers actually are members of. So we partner with them to enable those smallholder farmers to get access to credit for like inputs or warehouse financing receipts, and so that's at the primary level, and the other value chain actors who are also key for that value chain, and I'll just pick up one value chain such as coffee, where we've got input supplies and the like. So we also offer credit facilities all the way up to them. So basically what we do as a bank, we embed our processes into the existing ecosystem. The AMCOs are very aware of the farmers that are their members and the sort of credit that they require. And we get into partnership with them, but also with other players like warehouse operators. So it becomes like a tripartite agreement between ourselves, the warehouse operators, and the AMCOs, whereby we offer the credit facilities to the farmers, smallholder farmers through the AMCOs, and then all the repayments or collections for the AMCOs are channeled by the warehouse operators from, of course, whether they're exporters or processors who have come for the produce through, so they're able to pay back the credit that they require. So it's really tailored per value chain.
Thank you, Aloyse. Maybe instead of going for another round of questions with my panelists, let me simply ask one or two questions, and I will open up the floor for maybe some more questions from the audience, and I'll come back with my other questions later. So my next question is Endeshaw, for you. We are hearing about what access to finance can also bring in terms of usage, building sustainability of these small businesses. But before we get to that, in terms of knowing how to get access to this, because not everyone knows about the availability of this type of services and how they can utilize them. And then others also know about this types of loans and such products, and sometimes can kind of abuse them to the resulting negative impacts for these people as well. So how do you see the role of financial literacy in making sure people with access to credit of this type are not harming their own creditworthiness or their own future in terms of planning it properly?
Okay, thank you very much. The literacy, I think it goes all the way towards capability, having the critical thinking capability to make critical decisions in the utilization of financial products. And when we look into both the financial and digital literacy aspects of it, it starts from the awareness creation around the products, and it goes toward this knowledge and the skill. And with those, you'll be able to manage or tailor your attitude and behaviors around how you'll be utilizing such financial products. Maybe Paul can correct me if I'm not wrong. The incident that we have seen in Kenya in terms of over-indebtedness of individuals and businesses because of the availability of thousands of microcredit providers in the country. There were a heavy over-indebtedness and also even millions of Kenyans being blacklisted from accessing financial services in the country. We're not there yet. But microcredit products now are emerging in Ethiopia to be accessed by be it individuals. Even earlier, Munir was presenting us the partnership between Ethio Telecom and Dashin Bank. Around 1 million or 1.2 million individuals have accessing microcredit products. So others, like for example, Cooperative with Michu and the others, they are now starting to announce the delivery of micro product. So how are we going to even beyond building the financial capability or financial literacy of consumers or the clients, even how are the financial institutions going to protect these consumers in creating awareness and also even managing the attitude and behavior not to take multiple loans so that it ends up with over-indebtedness by taking multiple loans. Some even take loans to pay the previous loan. And even, for example, there are multiple loans that, for example, businesses are taking from Michu platform. How is that being managed is a responsibility of the finance institution to manage the behavior of the consumer. So the finance having that knowledge or literacy skills on financial finance management is critical because it builds up in inclusion. The basic knowledge or skills to operate mobile phones will create financial inclusion in the country. But it doesn't create the ability of the consumer to actually make that critical decision whether they have to take, let's say, X amount of money from Y institution, why they could have a potential or a better offer from another institution, which can serve them a better product or a better purpose in using it, or even push themselves into over-indebtedness. So from that perspective, having that knowledge or literacy level from early age and also even during managing their own business, financial literacy creates the ability for individuals to be able to make those decisions where they can make critical loans or behavior decisions in terms of utilization of such funds.
Thank you, Endeshaw. So one more question to Aman, and then I'll accept some questions from the audience. Maybe we have heard about innovation, we have heard about partnerships, but maybe for the Mitu in particular, what would you say would be its success factors, and what did you guys do right that led to this result?
I think the success factor for Mitu goes from the outset, the paradigm shift that comes from our leadership, rather than coming up with the usual way of licensing a product into going to partnership. As you know, in this platform economy or shared economy or what we call gig economy, the more the player, the better. I think here Porter's law cannot apply. So the more the player, the better. That means if you have one bread alone, if another player comes, that means you cut the bread into half according to Porter's law. But according to platform economy or gig economy, if you have one bread, if you have another player or three player, instead of dividing that one bread among two or three, you will create another two or three more breads. So in terms of that, this partnership has helped us. So the success factor is the paradigm shift. Then the relationship, that is the positive and trust-based relationship that's formed between Coop Bank and Kifiya, and as well the personal relationship that we have developed. Instead of, we have done our due diligence, of course, but after that, the positive and the forward-looking relationship is one of the success factors. But above all, the leadership of the bank, especially, I would like to thank my boss, the president of Cooperative Bank of Oromia. So when we came up with new idea, he understood the idea, he owned the idea, and he pushed it further. And even what he's told us is, you know, I will give you an award or a prize if you make a mistake. So the culture of allowing to make a mistake, or the culture of risk-taking that was produced, was the main success factor. Then after, especially the openness to learn, and the urge to go forward and come up with innovative idea is a success factor. That's the attributes.
Okay, thank you, Aman, and my panelists. Maybe let's get some questions from the room, and I'll come back. Okay, so who is getting the mics out? Yeah. So when you ask, please introduce yourself. Let us know to whom it is directed, and make sure your questions are brief.
Hello, I am Nakut Faith from Uganda. My question is directed to the M-Pesa gentleman and the other panelists who may wish to answer. The question of access to finance, how people use that money when they access it. In my wood, it has boosted consumption rather than production, because people have access to their money, so they can get their money and spend it on consumption. Do you also interest yourself in what our people use that money for, or we are just in the business of lending? In my wood, people are selling fixed assets, land, to repay financial institutions and mobile dealers their money. And in the process, they become more poorer than they were before. Is it something we want to begin thinking about, or we will just continue lending and we don't care how they use it?
Thank you very much. My name is Masfan from Dashan Bank. First of all, I would like to thank the organizers for organizing such an important gathering annually and putting forward such critical agenda to our discussion. There is no doubt that digital and all those platforms that we have been listening to our insightful presentation from the panelists, that it will contribute to the financial inclusion and access to finance agenda of this region. But how inclusive are these policy strategies and platforms are for some segments of our society? For instance, for people who need Sharia-compliant financing, how inclusive are your platforms and mechanisms? Probably Aman, Mr. Munir, or our colleague from M-Pesa can share their perspective. Thank you.
Okay, thank you. My name is Abinazer. I'm from Switch. And it's really quite interesting panel discussion, especially to hear about partnership and collaboration, and the presentations that we saw from Munir. It's quite interesting, and I like to emphasize on partnerships too, because as Switch we always value partnerships and collaborations, and the numbers that we saw, that two computing institutions can also contribute to digitalization is impressive. So my question is, so these partnerships is quite important. And also, what's your comment on how to overcome some of the barriers to digital adoption, such as limited to digital infrastructures, low level of digital literacies, and lack of trust in digital solutions or services? I think Munir can also answer or comment on this. Thank you.
Okay, thank you. While you consider your next round of questions, I can start, or I can give my panel a chance to respond. Maybe we can start with Paul. You have a mic on.
Thanks so much. I think that's a really important question, only that I'm trying to recall the name. But I do appreciate the question in the sense that credit is promoting consumption over production. As you recall, what I said was the initial intention of microcredit and saving was to promote saving over credit. But the customer behavior proved wrong, which was a bit unfortunate. And even to put a context to your question, it's true that once people are given credit, there are a manner of ways in which they use that money for. The good ones will use it for the need why they borrowed. We have seen people using credit to pay another loan. We have seen people using credit to do betting and gambling, which has been extremely is a big concern to the society. So what we have done as an organization and also in partnership with government, I'll give you an example of the interventions that we have put in place. I'm sure a majority of you may be aware of the product that was launched 2 or 3 years ago called Fuliza. So Fuliza is an overdraft on a mobile, where you have an overdraft on your M-Pesa wallet. And how that product works, it allows you to complete a transaction when you have insufficient funds, but the use cases for it are clearly defined. So we have excluded things to do with paying another loan, doing gambling or betting. So we have removed the use cases which we do feel they are not really of value to the customer at the point of borrowing. That is number one. Number two, I talked about the journey we are in. So we started from a financial inclusion to financial empowerment. Now we are going into promoting financial health. And now we want to turn the tide to be able to promote savings. I talked about the 13.3% of GDP. It's a saving that we have in the entire country, which is extremely unfortunate. So how are we going about this? So when you look at how economies exist, and especially opportunity to save us are with banks. And it's true that banks don't pay decent interest rate. And customers don't really see value of keeping money in the bank. Where customers are able to get a good return is when they invest in money markets. Yeah, when they invest in government instruments where they're guaranteed of the return on how much they can make. So one of the things, and maybe you may have the information, is, well, Safaricom as an organization have launched what you call a unit trust on mobile. The current unit trusts that are accessed through the fund managers is extremely a manual process, and someone has to go and visit the fund manager to fill in a form and then be able to put in some savings. And also the amount to save is predetermined. So currently it stands at almost $50, and not many people can be able to access that. So looking at the customer behavior, where we are driving customers to betting and gambling, what we are telling these customers is you don't need to put in money at a risk. You can save as little as 0.01 cent of a dollar for you to be able to earn a certain interest. And that product, how it does, you are paid your interest on a daily basis. The capitalization happens on a daily basis. And the liquidity of that product is that you can be able to put in money digitally and be able to access your money digitally as and when you want. You may be aware the new government of Kenya, when it came in, there is a promise by the government to ensure we create a stable and a financially healthy citizens. So what the government has done is to launch a number of products. It's what called the Hustler Fund. Hustler Fund is, regardless of your status in the society, you can be able to access credit from the government. And what they have done is to ensure that they have removed a lot of the restriction in terms of assessing your ability to pay. And almost 20 million of the Kenyans now can access that credit. But what comes with that credit is a portion of that credit is put in savings. Yeah? The government have gone ahead to move it from an individual level to a group level. In it, even when you access credit, a portion of it goes to savings. So to your question, yes, that has been the case, but deliberate interventions and measures are being put in place to be able to reverse that and ensure we have more customers saving and less are borrowing. Thank you.
I think the question was how inclusive can be platforms be or could be. I think I can refer to what we are doing at the moment. We are looking at multiple products. So we have about 10 frameworks that we have developed that segments the market into economic groups, into gender bias, and then the religious component. So really, platforms don't have limits. It is how you develop the products to that specific things. And I think Aman will talk about what Michitu will do and how we address Sharia compliance, how we address intentionality for women-specific products, how we address intentionality on the segments of the size of those micro enterprises. So platforms theoretically and practically don't have limitations on how much they can go, and actually they are the only way to become inclusive. The other way is not inclusive, it is illusionary for me. The second thing is in terms of partnerships for digital adoption. I mean, I agree with you, it's key. And unfortunately, because of time, we could not cover all the partnerships required to make digital adoption seamless or near seamless. So if you look at, there's a lot of partnerships that are formed between banks and literacy delivery companies, training companies, product development companies. So really it is a partnership where the ecosystem thrives, but key, and the challenge that I see in Ethiopia is we find it very hard to identify the values that are specialized. So everybody wants to do the same thing again and again or copycat from one another, which makes it very difficult for partnerships to leverage and expand digital adoption. So the key is really specializing and understanding what value a partner brings onto the table, and there will be several of them that will make the ecosystem strong. Maybe to go back to the lady that has asked the question around the systemic risk or the perceived risk that microlending is bringing. Today we are able to have that discussion because of that innovation. And we need to be very clear that there is two sides of the game. If consumers don't have access to credit, they cannot buy, which the manufacturers on the other side manufacture. I think the challenge that we have seen and the learning for Ethiopia is that as you expand consumer loans, you should be deliberately and intentionally expanding micro, small and medium loans for the manufacturers, for the producers to be able to keep up to the demand that consumer lending brings. I think the danger of consumer lending is when it's used, as Paul said, for not consumption, but for things like the gambling that does not have a return. I mean, consumption in general is not bad. I mean, I buy clothes, I buy food, I buy grocery. Those are all consumptions that some industry manufactures. So it's about bringing the balance on where the money is deployed.
Okay, thank you, Munir. Aman, would you care to add on this question, or he answered it well? Oh, enough. Okay, do we have additional round of questions from the room? Can I see hands? Okay.
Thank you for the panelists for your wonderful insight. My question is for Michu or Kifiya and Coop. You have presented that billions of birr have been provided for SMEs as a loan. How the bank manage risk associated with an uncollateralized loan, and how is the regulation is supported you? Maybe for neighbor countries, how you manage these kinds of loan in related to regulation, policy and regulation. Thank you.
Thank you, Mr. Moderator, and the panelists. John, once again, from Uganda. My comment is on the cost of financing. We did a research in Uganda, and we established that these micro borrowers, they don't look at the cost of financing. It is the least issue they look at, because for them, just to have access to finances is a big opportunity. And what I've seen in this digital credit financing, maybe the M-Pesa guy can tell us, is the cost of financing is very unreasonable. Yes, I understand, because it is also, the risk is high and they need to charge a high interest rate. But these rates range from like 1 to 3% per day. If you annualize that, it's like 365 to I think 900 something % per annum. I don't know which business you can do to really get any margin to pay that interest rate. So, of course, the private sector will enjoy that, but I don't know what governments can do to regulate that, to control that, or intervene to, because these companies are ripping off our poor people, to say. Thank you.
Thank you for the questions. I think those are directed at Paul, and Munir can also comment on. Aman will also add on the third one. And I'll come back with my last set of questions.
Thank you. The first question from my friend, he asked about how we managed it, and from the regulatory side. As I tried to mention, actually we are not reinventing the wheel. This product is there in other countries. As well, when we come to our country as well, lending without collateral, of course, for pre-shipment and for customers, mainly corporate customers, is there. When we come to the micro lending, the number as well as the amount, we're using credit scoring engine. So that credit scoring engine, based on the pattern of their transaction as well as their behavior, it scores. So, for example, we've given a loan around 100,000, but overall more than 285 applied. So that means the credit scoring engine rejects the majority and allowed those who have passed the criteria. Regarding the regulation, what we have done is, from the outset, we start discussing with National Bank of Ethiopia the concept paper, as well as the business proposal, the risk factors, how we are going to mitigate it, and the impact on the society, as well as the inclusiveness. We have discussed with National Bank of Ethiopia repeatedly. Actually, before we go live, it took us almost 2 years to convince internally first within the bank, then the regulatory, and fortunately the regulatory body, National Bank of Ethiopia, they were very positive. Then after we have started, for example, we have faced so many challenges. One of the challenges to give, for example, 5,000 or 3,000 birr, we have to go to the to the National Bank of Ethiopia Credit Bureau. We have to see whether those people are blacklisted or not. For each, we used to pay 200 birr. After we have discussed, the amount is small. You have seen they have changed it, less than $100,000, 100,000 birr. We're no more paying. Now we still have, for example, challenges. We have presented to them. For example, we cannot give a micro lending for anybody who does not have TIN numbers. We have presented this case, they're looking into it. So regulatory wise, it's both directional. There is an initiation from their side. We, from the outset, we have been discussing with them. We have been creating the awareness. We have given, we've gone all the way with them. So they are adjusting us, they're correcting us, and they're also advising us. So from this side, I think we've seen a positive thing from the regulator as well.
The issue of cost of financing, thanks for that question. So microcredit and saving in Kenya, let's say, microcredit started in Kenya in the year 2012, which was totally a very new concept. Before then, you needed to be a bank customer, and you needed to go to a bank branch, and you needed to provide papers. It could be in terms of your pay slip, it could be in terms of whatever collaterals you may have, maybe land or building. And the non-performing loans, because of the intensity in terms of the scrutiny of the customer, the non-performing loans were extremely low. So when the country's transition from that, you are dealing with a customer you have never met. Remember, these are customers the bank has never met. So to your point, the initial risk was extremely high. It had gone to a levels of 10 to 12%, against the industry average of 4 to 6%. That informed the initial very high interest rate in those early years. So what happened? So one of the things you need to look at it from a digital credit is a product construct. The product is not 1 year loan, it's a short-term loan, which is normally 30 days. So for argument's sake, if the interest rate is 5%, and it's a 30-day loan, it only applies for that month. So when you try to annualize it, it skews the perception, because just a 30-day loan, so the charge is for a month, is not for 2 months. So you need to look at it from the product construct. But I think the most important thing here is, what are the interventions that are being put in place? So the initial days of assessing a customer to pay, you have limited data. But as a customer continues to use the product, you have more and more information, and you start having a bit of certainty in terms of the ability to pay. And that is where we start adopting what we call the risk-based lending. So the riskier you are, the higher the rate. The less riskier you are, the lower the rate. But what has happened? So the government has put in some intervention over the years. Remember, this was uncharted waters. No one knew. The players themselves didn't know. The government itself didn't know. Customers themselves didn't know. But as we grew as a country in regard to digital credit, we started putting in enough interventions. One of the interventions that was put in place by the government at one point was interest capping. Remember, it was not only purely digital credit, it was also affecting the bank term loans that they give, the 3-year, 5-year, 10-year loan. So that is one of the interests that intervention by the government to try to manage that. In addition to that, besides having a risk-based lending for digital credit, that was also extended to the bank loans. But it is never fair it is never the right thing when the regulator or the government intervenes. It is always better when it's industry-driven. So how is a partnership for digital credit? It is neither by the mobile network operator, so it is between the mobile network operator and the bank. Mobile network operator can never lend. It's not a bank, it does not hold deposits, and it does not participate in lending. So it's a partnership between the MNO and the bank that comes together to offer digital credit. But based on the learnings and over time with the intervention of the government, you will see that there is a stabilization in terms of the interest that is being charged today in terms of the loans. You saw the other day, digital credit loans interest was reduced by 50%, not by the intervention of the government, by a conversation by the industry players how to manage that. But to the point here is, and to the earlier point in terms of promoting consumption over production, and also listening to Munir, is not that if you don't use money to buy food, it's on production. It's an issue of then, how do you become innovative as a player and ensure you manage how the money that is given to customers is used. And those are the innovations that the players in the country are coming up with. But again, proper customer education in terms of this is not a one-year loan, it's also a short-term loan. And the earlier you pay, the cheaper for you. The longer you take to pay, the more expensive it becomes. We're having a 30-day loan. If you pay within 2 days, it's actually interest-free. If you pay within 10 days, it is a lower interest. If you hold until 30 days, it becomes much expensive for you. And I'm sure the bankers will explain to you why this needs to happen, because they have alternative ways of investing and also making more money on a less riskier investments. And so this is a balance of what works for the customer and what works for the business. But I do hear you. We need to continue promoting a healthy business where we don't take advantage of our customers, but ensuring we provide affordable digital products and services to our customers. Thank you.
Thank you, Paul. Actually, was jotting down one round of questions for each of you, but it looks like we're running out of time. Maybe do we have a little bit of time to go one more round? Okay, unfortunately we're running out of time, so I'll give maybe each of you like some 30 seconds to say whatever we have not mentioned, or what takeaway you would wish us to go home with. Maybe I will start with Patricia.
Thank you. I think the conversations have been very, very relevant, lots of takeaways, and I believe there is opportunity for continuous learning and sharing experiences and interventions that are happening across different organizations, banks, fintechs, mobile service providers, etc. And I also find the conversations relevant in terms of we cannot afford not to do certain things. If you're a bank, you cannot remain doing banking the way you used to do banking in the 19th and 20th century, but be able to actually project and recognize what does banking look like in the 21st century. And I think the conversations have only begun. Thank you.
For me, once again, thank you so much for having this opportunity to interact with the industry players and more so the leaders. Looking forward to working with you in the next coming few months, few years, as we walk through the journey of deepening financial inclusion in Ethiopia. The conversation of today validates what we have always known, that truly, when you come from outside, you think Ethiopia is not digital. There is a lot that is happening in this country that is never told. It's never said in many forums. And my interactions with all my colleagues, are the ones in the panel and also on listening here, is that truly Ethiopia is digital. It is positioned to be successful. I see Ethiopia being better, achieving better results that we have seen in other East African countries, including Kenya. I've shown you the gaps that are there. We will share the learnings. I think the most important thing is sharing the learnings from outside and also getting the learnings from inside Ethiopia. And then not copy-pasting. And I like what Munir said. It's never about copy-pasting. It is what really works for the customer based on the need and the challenge that us as players, it is never one player, us as players, as determined and validated, that is a true customer need and challenge that we need to address. Looking forward for better days and years in Ethiopia as we transition, continue the journey of digitizing Ethiopia. Thank you so much.
I mean, first of all, I think thank you for the East Africa Summit and Dr. Gamachu to once more invite me to speak. We'll never be tired of speaking. But as I see this room, I have mixed feelings because It's the only country that I know that does not like sitting down and learning and exchanging knowledge. If you go to Paul's country, any summit of this will be full until the last minute with everybody that is relevant in that sector. And in Ethiopia, if you see this room, it's half empty. And the people here, I think, should be acknowledged. But I wish that we would understand that knowledge, in the knowledge economy, is the only way you can pass through this next century. My hope is that on the next summit, we see more people wanting to learn, wanting to share, and wanting to exchange knowledge, because without that, I see a very bleak future.
I would like to thank the organizers, Dr. Gamechu, thank you. I would like to thank the audience as well as my colleague Abel. Thank you.
Okay, thank you very much for having me here for such a vibrant session, and Abel for your moderation. Maybe the point that I want to raise here, I think it was already raised initially in the in the presentation about partnership. In most cases, what we see on our TV window is similar advertisements from our financial institutions. The market is big, and one of the things, even the questions that are being raised here are around awareness and the literacy of consumers, and also then either being over indebted or even the cost being high. That comes with the literacy level of the consumers, and also how the products are sold by the service providers. So we have a big market, and we can share responsibilities in educating consumers on how to utilize the services and how to approach them, including on how to use the money rather than buying household goods. It would be better for consumers to buy them for their businesses. So from that perspective, financial service providers can collaborate in a way that can educate a country or a continent. So that could be my message. Thank you very much.
Do we have Aloyse? Okay. So thank you so much, my panelists, for a very interesting and engaging discussion. And then thank you to you guys as well for sticking with us until this moment. I hope you have enjoyed the discussion as much as I did here. Hopefully we'll have further discussions in similar nature tomorrow as well. So please, a round of applause for my panelists.
Thank you very much, Ato Abel. You were a wonderful moderator. Can we have another round of applause for him, please? May you stick here, please? Can we have a picture with your panelists? Thank you very much. And definitely thank you very much for all of you that are here. Tomorrow, bright and early, we're going to start. I know that we lost 150 people from the finance sector, but tomorrow we're going to have the whole room full as well. And I'm very happy to know that we have guys that have documented every single conversation that we've had. So, sir, we'll make sure that all the learning and the knowledge will be shared. It was wonderful having you for day one. I will see you here bright and shiny tomorrow morning. Thank you very much. Day one is officially over.